So welcome to Maintaining the Mortgage, which is a webinar that Great Lakes Foundation thought was very important to present, given the amount of clients that we currently see who have been struggling with making their mortgage payments. So we hope that the information that we're providing is valuable to you. And again, we welcome you. My name is Willaine Boone. I'm a housing counselor with Great Lakes Foundation. I have been assisting homeowners in distress since 2008 during the first foreclosure crisis, helping them get loan modifications, short sales, deed in lieu's for both retention and non-retention options. So I'm also joined here with my colleague, Janine Folan. Janine, I'll let you introduce yourself.
Hi, my name is Janine Folan, and I have been in the business for over 12 years and actually worked in Wisconsin for a certain period of time and now here in Illinois. I just really enjoy helping people resolve their financial difficulties or moving on to the next chapter of their financial life. Just want to mention that we have a team of 6 counselors here spread out over northeastern Illinois. And we do in-person appointments, we do virtual appointments, and we do phone appointments. So we're really accessible. I work out of the Country Club Hills office. Willaine works out of our Chicago office, which is in Uptown. And we have counselors, again, spread out all over northeastern Illinois. So we cover quite a large area. And I am going to turn it over to our very special guest. It's attorney Rima Sleeman. She's with Chicago Volunteer Legal Services. So Rima, go ahead and introduce yourself, please.
Thank you, ladies. Hello, my name is Rima Sleeman, and I'm a staff attorney with Chicago Volunteer Legal Services, which is a legal aid primarily serving residents of Cook County. I have been with Chicago Volunteer Legal Services, CVLS for short, for 2.5 years. I primarily focus my practice on foreclosure defense and helping homeowners retain their homes. And I also help some tenants in eviction courts. Before joining CVLS, I also worked for a Cook County judge in a foreclosure division for about 5 years. So I'm excited to be here and share whatever knowledge that you guys might find helpful. Thank you for having me.
So we have a few netiquette rules. I think, Willaine, you broke one of them already, but we said that we wanted all our participants to remain muted, ideally during the presentation. But I think Willaine was just trying to work out some of our technical difficulties. Anyway, we have a chat box that you can communicate via the chat box. During the presentation, put your questions in. Our plan is to get to the questions at the end. If we can answer some of those questions, then prior to that, we will, but primarily at the end. So today's presentation will provide you with a general overview of your homeowner options. We are not providing legal advice, however, tailored to any specific individual. It's all generic education and generic information, which is great because some of those options may be applicable to you, but some may not. If you need individual legal advice, we definitely want you to consult with an attorney outside of this presentation. There, of course, are legal aid organizations out there, and then there are regular attorneys. Willaine and I are members of the GLCU Foundation for Financial Empowerment. We are part of their housing counseling agency. We're actually a HUD-approved housing counseling agency, and we are both HUD-certified housing counselors. Our mission is to improve the stability and quality of life of families and communities by providing education and counseling in the areas of financial management, tenancy, home ownership, and foreclosure intervention. I'm going to just run through the services that we actually provide. Financial education, well, that's basically what we're doing today. We have webinars we put on throughout the year. We are actually doing pre-purchase counseling sessions I should say pre-purchase education classes. Hello, pre-purchase education classes that are free in person, one a month throughout Northeastern Illinois. So if you know anybody looking to buy, that's a great place to start. And in the area of financial counseling, it's basically helping people learning how to manage their money, reviewing their credit, improving their credit, things like that. So all the other services besides education really cover counseling. So that the financial counseling is where we start. We do the same things in financial counseling that we do in the other services. So in rental counseling, in addition to the financial counseling services, we are letting people know um, where they can find low-income rentals. We don't have time to really go out and look for you, but we can send you websites and things like that where you can find low-income rentals. The pre-purchase counseling is wonderful for anybody wanting to buy. We help people determine how much house they can afford, what are the different types of loans that are out there, because there's a variety of loans that serve different purposes. How about the down payment and closing cost assistance programs that are out there? There's a number of those out there. We're aware of those and can refer our clients to those programs. And to make sure people understand exactly what they're getting into. That's the most important thing. It's probably going to be the biggest purchase of their lives. So we want to make sure that people understand what they're getting into. Post-purchase counseling can cover things like, oh, I want to access the equity in my home. What's the best way to do that? I have questions about my insurance. I don't understand my insurance or something like that. Or I'm concerned that maybe my insurance is too high. We can help review things like that. Also talk about areas like home maintenance and things like that. So there's different, once you become a homeowner, there might still be concerns that you would have. And also finally, and one of our topics for today is our foreclosure intervention counseling. Ideally, we'd like to see everybody stay out of foreclosure completely, whether that's they stay in the home retain their home, or they actually decide that leaving their home is the best thing for them. So that's what we're referring to as an exit option or options. So we can help people walk through that, work with lenders, help people fill out forms that they need to fill out for their lenders, understand what their options are. Those are all basically the things that are covered under the foreclosure intervention counseling. And I see next I have, I'm going to turn it back to Elaine. She is going to cover, I did hit the key. Let's see if I can get this to roll over to the next slide. There we go. I'll turn it back to you, Elaine, to get us started for our topic of the day.
Thank you for describing our services, Janine. So by the end of the webinar, you will get information about general tips if you cannot pay your mortgage, specific options that you may have regarding such as a modification, for deed in lieu or forbearance. We're going to talk about the foreclosure process and timeline in Illinois, and how to avoid scams, and if need be, how to handle transitioning out of your home. The next screen. So just as some general tips, if you are experiencing or are behind on the mortgage, it can be a very stressful period of time. And a lot of times I've had clients who don't want to face what's going on and kind of ignore mail or being served or even talking about it. So that's our role. If you find that you are behind on your mortgage and feeling stressful about it and don't know where to turn, that's our role. So don't ignore the problem. The first thing is to contact your servicer as soon as you realize that you may be late. Again, if you want assistance with contacting your servicer, we can call with you. But the options that are available to you are only available through the service. So that's the first step. And then, of course, as I mentioned, respond to all mail. Don't just let it sit there, take a breather, open up the envelopes, um, open the door if need be to receive the documentation and court documents if served, because there is a time frame involved with handling the problem. So the other thing is that the workouts that are available to you from your lender are based on the type of loan that you have. And the different types of loans include whether you have an FHA loan, VA, USDA loan. Those are government insured loans. Fannie Mae, you may have heard the terms Fannie Mae or Freddie Mac, are conventional loans. And then there are private loans that are portfolio, or those are offered by private lenders. So depending upon who the investor is, with the Fannie or Freddie or private, or who the insurer is, there are specific guidelines that are given to servicers or lenders on programs that can be offered to you. And we are aware of those programs, and sometimes when you call the lenders, customer service individuals may or may not know what those options are. So again, that's another reason to reach out to a housing counselor. Prioritizing your spending. I'm sorry, if you can go back a minute. Thank you, Janine. So the other thing is, if you are in a position right now where you're not or cannot pay the mortgage, or you can pay it, but the lender is not accepting the funds, save as if you still had a mortgage payment. This is the best time to create reserves, and also to reduce your spending. So look at areas of spending that you can possibly reduce or eliminate in order to prepare to build reserves, or prepare to move. And again, we provide the guidance and the support to help you through this situation. Okay. So I'm going to turn it over to Rima to talk about the different types of options that are available.
Thanks, Welaine. So before I go over the different options that you have or may have, depending on what type of mortgage you have, as Welaine just mentioned, I just want to mention that my experience with dealing with homeowners is that they take the lead and they do contact their mortgage servicers, and they ask about what their options are, but it depends on what servicer you have. Some of them are good, some of them are really bad and have bad customer service, and they experience delays in the answers. That can put you at a risk of being further in default or increased default, or if you're at the verge of being in default, it puts you in default. So if you have such experience with your mortgage servicer, I highly recommend that you be proactive and reach out to a housing counselor, because they know their options, and sometimes it helps to have a third party that's involved that knows what options you may have depending on what kind of loan you have, to help lead you. And sometimes you can elicit more response from the
Can you go to the next screen?
I'm sorry, there was Rima froze on me. And I am clicking, but it's just, there we go. I'm sorry, it's not always responding immediately when I click on it.
Yeah, this is weird. I think we lost the other attendee that was here. Can you guys hear me?
Yeah.
I can hear you now. Oh,
He's
wait,
back.
he's being
He's back.
readmitted. Okay.
All right, apologies. What was the last thing you guys heard?
You were talking about the forbearance and making the importance of reaching out to a counselor to help with communicating with the lender, because Sometimes it's tough to get through to the right party, and that's where you left off.
Absolutely. Okay, so I'm going to start talking about the first option. I think, Janine, I'm sorry, you're advancing the slides. If you can go back to the forbearance one.
Sure. I'm
So
sorry. I thought I was supposed to do that. I'm sorry.
it's okay. So the first option you may be able to have, which is really the go-to for most people, is a forbearance. A forbearance is basically pausing your mortgage payment, and the suspended payments are not forgiven, but they must be paid back at a later time. When a forbearance ends, your lender must work with you to make those payments, depending on what kind of investor backs your loan. So they might offer you a repayment plan, or they might put the payments that were suspended at the end of your loan, and they call that either a partial claim or a deferment, or they can offer you a loan modification. And sometimes the partial claim and the deferment go hand in hand with a loan modification, because you're essentially modifying the terms of the loan. So again, this option might not be available for all types of loans. That's why it's important to contact. This option was highly popular during the pandemic, but now that the pandemic has ended, the options are kind of limited, and there's no more national emergency. So this might not be an option for you. So again, you have to contact your servicer to find out if this is an option that they offer. And do it as soon as possible, as soon as you know that you're defaulting or you have already defaulted, to see the least amount of damage. So a repayment plan allows you to make, if you have the ability to pay, after you get off of the forbearance, which can last anywhere from 1 to 3 months, sometimes 6 months. So when you're behind and now you can start making payments, the lender should be able to provide you with this plan to pay back the default amount, including the mortgage payments, to be paid back within 3 to 12 months. So you will go back to making your regular monthly mortgage payments, in addition to an additional amount on top of that in order to work towards your defaulted amount. If you have, so this repayment plan option is available for you if you get off of forbearance, as well as if you have a reverse mortgage. If you have a reverse mortgage, the types of payments that you miss are typically either not having insurance or not paying your property taxes. So in that case, the mortgage company advances those amounts on your behalf. And the only way you can avoid foreclosure is to enter a repayment plan. But for those types of defaults, the amount of time that you can pay it back would be 5 years. So 60 payments, 5 years. The next option would be a loan modification. And a loan modification is what it sounds like. You're modifying the terms of the loans by changing the interest rate, by stretching out your payments. So if your payments, if you had a 30-year loan, it could stretch out to 10 years. That way the mortgage company can offer you an affordable payment based off of your income. And there are, again, different types of loans: FHA, VA, those are for veterans, Fannie Mae, Freddie Mac, and the USDA, which is the United States Department of Agriculture loans. These have specific requirements by which the servicer has to review the borrower and offer them kind of a fall down type of options for a loan modification. So the lenders have to abide by those guidelines. It's just based off of income and what they can offer the lender in terms of the interest rate. But there are certain types of loans that are not government backed. The investor can just make up their own rules on who qualifies for these types of loan modifications or not. And the next option that the that the service company the mortgage company might offer after getting off of a forbearance is a claim advance or a partial claim. And those types of loss mitigation options is available for mortgages with insurance premium. So this is, and you would know if you have that on your loan, especially if you took out the loan years ago and you can't remember. If you have an extra payment included in your mortgage that's called the PMI or an MIP, they're essentially the same thing. It just depends on whether it's a conventional loan or an FHA loan. Basically, the mortgage insurance company will pay the past due amounts to bring the loan current, or the past due amount, but that amount needs to be paid back at a later date. So again, if you're not sure, or you're not sure if you used to pay it and it's no longer applicable, you can always call your insurance company and figure out what type of loan you have. So if you have an FHA loan, and if you have a Fannie or Freddie Mac, it's called a claim advance. So they're essentially the same thing. And it really helps people who default to put that default amount at the back end of the loan, and then it gets paid at the maturity date. And basically the maturity date means, let's just say you took out a loan for 30 years, you've been paying on it for 20, the maturity date would be in about 10 years. So those are kind of the retention options if you want to keep your house. But there are other options that don't include keeping your house. So non-retention options, they're called mostly dignified exit, because that it will allow you to exit your house without having a personal deficiency, or without having the sheriff come out and physically evict you. The first one is selling the property. If you know that you can no longer afford the property and you know you have equity in there, this is an option to preserve that equity. So I know that in today's market, it might not be a good idea, even if you have equity. But saving the equity in your house, it might not be a bad idea if you know for a fact that you cannot make the payments any longer, or if your income has decreased significantly and you know for a fact you will not be eligible for a loan modification. Because you can apply for a loan modification and it might take a few months for you to hear back from your mortgage servicer. But in the meantime, your payments are accruing, the interest is accruing, the default amount is getting bigger, and that eats at your equity in the house. And again, if you're already in default, which means that your servicer probably referred your case or your file to their attorney's office, and they probably filed a mortgage foreclosure lawsuit, which the amount that you owe right now includes attorney's fees, which also eats at your equity. There's an option of a short sale, which is a little bit different than a conventional sale. If you don't have equity in your house, but you still want to sell and avoid a personal deficiency, you have that option. A short sale is when a lender agrees to accept less than the amount they're owed to pay off the loan. So let's just say you owe $200,000 on your house, but you find a buyer that's willing to offer 180, and the bank agrees to take that, then they're going to forgive the extra 20,000 that you owe. So a short sale requires an arm's length affidavit. What that means is that they want to make sure that you attest to the fact that you're not selling the house to your brother or to your, wife who's not really on the loan, to make sure that you are not trying to get out of this debt by just, selling it to someone who you know. So in a short sale, the cost of the closings will be covered by the lender.
Hey,
s-
Rima, she froze
Yeah,
on my end for a second.
yeah, my end too. You might want to
I
repeat that
am back.
repeat that last sentence, maybe, Rima.
Okay, so the cost of the closing for a short sale will be covered by the lender, and the seller does not have to pay any closing costs. And the seller usually does not get any funds. They just get to walk away from the house. They might be able to get a small moving cost, but that's about it. But just a quick note about a short sale. So in a short sale, potentially the lender is forgiving a certain amount of debt. So they're going to provide you with basically a tax document that says that you have a certain amount of debt that was forgiven. When you go to file your taxes, if you have assets that are greater than the amount that was forgiven, and I'll give an example. Let's just say the amount of the debt that the lender forgave is 10,000, and you have assets that are worth 20,000. You might have to pay taxes on that extra $10,000 that you have, or less than the amount that was forgiven. Then you'll still have to file it and just claim it, but you won't be taxed on the forgiven debt. So if your forgiven debt was $10,000 and you have assets of 5 or less, or anything that's less than 10,000, then you won't have to pay anything on that. And that basically makes sense because they don't want people who have multiple assets to basically have their debt forgiven while they could have paid the bank what they're owed, 100 cents on the dollar.
Looks like you froze again, Rima.
I apologize. I think my internet connection is going in and out, but I'll try. I'll try to keep an eye out on it. So, but
Oh.
I didn't say anything.
Okay, good. No worries. It happens, right?
Yeah. But I didn't say anything between the next slide, so that's perfect. It was a nice pause. But anyway, the next option you might have is a deed in lieu, and this is that if you don't have equity in your house and you can't afford the mortgage, and you want to avoid a personal deficiency and a foreclosure, then this is a good option. All you have to do is quit claim deed the house back to the lender. A foreclosure process, which most people would be if that is an option to them, then the mortgage company will just dismiss their foreclosure against you, and you'll get to walk away without a personal deficiency. The next one, the next option is A cash for keys. This is essentially a deed in lieu. It just you're promising to walk away from the house and keeping it in good condition. So after the inspection, you will get somewhere between 3,000 to 10,000, and that should cover your moving costs. So again, that's another option if you don't have equity in the house, that you may able to walk away with some cash in your pocket. And then Chapter 13 bankruptcy doesn't, a lot of people might think, because when you hear bankruptcy, you would think that people are losing everything, but that's not true. A Chapter 13 bankruptcy is essentially a repayment plan, and it will get removed from your credit after 7 years. This option allows you to stay in your house. It only lasts, it's a repayment plan over 5 years. Once you complete it, then the debt gets discharged. So even if you default on it again, there's no personal deficiency. But again, that allows you to stay in your house as long as you maintain those payments within the bankruptcy. Then the bankruptcy will remain, and then you'll exit the bankruptcy, and the debt will get discharged, and you'll just move on with your life. And hopefully your situation has changed to the better within those 5 years. But having a bankruptcy on your record is no worse than having a foreclosure, because a foreclosure on your record will last just as long as a bankruptcy. So a bankruptcy on your record keeps you, a Chapter 13, it will at least keep you housed. So other options you might consider is, if you are struggling financially, you might want to lean on your friends or your family, or if you have any assets in terms of savings, retirement or employee bonus. But, I know that there are risks in all of these, but there's always an option to reinstate your loan. So let's just say you're behind by 2 to 3 months, and now you owe the bank 5,000 to 6,000. If you are able to make that payment by borrowing money and then going back to making your regular monthly payments, you have that option. You can just pay the bank whatever payments you missed, and then hopefully your situation is better by the time you reinstate. I understand that this might not be an option for a lot of people, because they might be behind by so many payments that a reinstatement is not available, or it's not possible for them. But this is why it's important to think of all of these options as soon as you know that there's a default that's going to happen, or if you are in the early stages of your default. So that's generally most of your loss mitigation options that you might be interested in contacting your servicer and also talking to a housing counselor about, to see what your options are. So the next thing I want to talk about is quickly go over the judicial process, a timeline of a mortgage foreclosure lawsuit. If you're currently facing a foreclosure lawsuit, a lot of people think that as soon as they get served with a mortgage complaint, that they're going to be out within 30 days, which is not true. It's not accurate. And, the eviction process is way faster. So I can understand why people think, they might be kicked out within 30 days. But I highly recommend people be proactive as soon as they're served with a complaint. This is not the first time they know that this was coming, because you get first, after 3 months of delinquency, you will get a letter from the mortgage company saying, hey, you have missed this many payments. This is the amount that is due to current. You have to make it within the next 30 days. Otherwise, we're going to file a foreclosure. Otherwise, we're going to file a foreclosure against you. And, most these payments need to be made by certified funds. And then, it's essentially a reinstatement. You reinstate your loan and you move on with your life. But if that doesn't happen, then by the fourth month, then a foreclosure will be filed against you and you'll be served. Technically, the mortgage company has 30 days to serve you with the complaint. Sometimes it takes longer to serve somebody because we have strict service rules. Especially in Cook County, the minute that a foreclosure lawsuit gets filed, an automatic 60-day court date gets scheduled with the court just for status on service. It's called a case management status. Nothing usually happens at that date, other than the judge just confirming that all defendants were served. If they have not been served, most judges continue for another status. So at this point, you are looking at about 6 months from default. That's where you're at in court. Once you're served, you have 30 days to answer the complaint, but specifically in Cook County, you get 60 days. And those dates could be flexible if you appear in court and explain to the judge if you're looking for legal assistance. So nothing is, concrete in terms of these timelines. But generally, if you don't do anything, then the judge is going to, or if you don't appear, the judge is just going to give the bank's attorneys what they're asking for, which is move their case forward. So again, you have a chance to file appearance and an answer. And when you do, there are judgment motions that get filed by the plaintiff asking the judge that even though, so-and-so filed an answer, we are still looking for judgment on our motions to allow us to go to sale. So once the judgment motions are entered, you have 90 days, and they're called, that's a period of redemption. It's a 90-day period of redemption. Within those 90 days, the bank cannot move to sell your property. And that's a chance for you to really work with the bank on your loss mitigation efforts. So just because you are facing foreclosure, that doesn't mean that the lender can stop all communication with you and not offer you any loss mitigation. A lot of people reach even to the point of sale and they eventually get a loan modification offer from the mortgage company and they get to stay in their house. So all hope is not lost if you're facing foreclosure, because within that 90 days, you're not losing your house. But if the 90 days comes and goes and the mortgage company sells your house at a public auction, they still have to come back to the court to ask the judge to confirm the terms of the sale. So throughout this whole period, you are living in your house and you have the right to possession. Not until the judge signs that order confirming the sale, that's when you lose, that's when you have only 30 days from when that order is entered to vacate the property. If you appear at that hearing and the judge agrees with everything that the plaintiff says, everything with what the bank is asking for, some judges, if there are extenuating circumstances, they can, on their own, using their own discretion, they can extend that 30-day period to 60. It's rare when they extend it to 90. You have to have like a very, very good sympathetic reason for the judge. But that puts us at, from the date of default through the order approving sale, that puts you around from 11 to 12 months to 14, depending on whether or not you appear in the case and defend it. That's about 12 months of the judicial process or timeline, if you will.
Okay, so Once a foreclosure filing is made, or even pre-foreclosure, that becomes a public record. And so if your house goes into foreclosure, you're going to be receiving communications from both legitimate and non-legitimate sources. You may have investors reaching out to you because they know that you are in dire straits or may be motivated to sell the property. You may be bombarded with bankruptcy attorney mailings and other attorney mailings, or people who are saying that they can help you get a loan modification. So um, one thing to remember is that your servicer will modify your loan at no cost to you. So you should not be paying anybody to help you get a loan modification. Uh, our services are free to you. We are not allowed legally to charge our clients for assistance with obtaining a loan modification or any loan workout. So avoid working with any organization who promises you that they will get your loan modified or stop your foreclosure immediately. Now, it is a way to slow it down. uh, Bankruptcy, as Rima mentioned, is a way to a seven will halt it shortly, but that is not a solution. Avoid working with anyone who pressures you to pay them, and absolutely do not sign any documents that you don't understand or that have blank spaces. So again, as a housing counselor, we can assist you with understanding the terms of the modification if you receive one from your lender or any other type of workout. I have, both Janine and I have worked with clients who received paperwork or even some really bad workouts, such as having a balloon payment after a certain period of time. And because people were in distress or thinking they didn't have any other options, signed the paperwork and were in trouble again, a year or less down the road. You can go to the next screen. So if foreclosure is the only option, these are some additional tips. So we can assist you in determining options for transitioning out of the home. Some were already explained today, such as doing a short sale. That is, if you do not have any equity in the property and you owe more on the property than the property is worth, that's considered a short sale. A deed in lieu is basically handing the keys over to, or ownership back over to the bank in lieu of or in place of a foreclosure. So you're signing over the deed and basically walking away from the property. We can assist with identifying income and expenses to create a financial plan. The HC is a housing counselor. So looking at where you are right now, how much money is coming in, looking at expenses objectively, because I know at this point in time that may be a hard thing to look at or to do. Um, Securing new housing prior to a sale date. So if you know that a sale date is imminent or losing or looming, that is, there are actually companies, if you are back in a strong financial footing and can make a mortgage payment, some mortgage companies can still lend to you with a larger down payment, or it may mean transitioning to a rental property. So there are companies there, legitimate companies, who can assist with transitioning out of a property. Of course, pack your belongings. The worst thing that I have seen, heartbreaking things that I've seen is people who have been evicted from their home and their belongings are on the front yard, and that's very humiliating. And you know, I just can't imagine. So facing what is going on, taking control, empowering yourself by packing your belongings and putting them in storage if need be. Post foreclosure, or even before it happens, you can start to rebuild your credit. So the foreclosure, will be out there for 7 years. It doesn't mean that you cannot purchase another property, but lenders will want to see how have you rebounded after that an event happened. Are you on a stronger financial footing now? How have you handled credit since that happened? Are you paying on time? Are you maxing out credit cards? Are you living within your means, meaning there's more money coming in than going out? And again, we can provide information on how to purchase again if that's something that you want to do. Uh, we have various partnerships and information about lenders who can assist with getting purchasing another property. So again, our role is to help you understand your options, help you determine the best course of action. So we look at some options that you may or may not have already considered. We assist with communicating with your lender. Often, sometimes that can be a stressful thing to do as well. Because you don't know what they're going to say, and you may not even know the right questions to ask, or so you're just kind of listening, and it can be very frustrating because most of the time you maybe even be on hold. So if we assist you with communicating with your lender, assisting with applying for modification. So it's not just a matter of just filling out paperwork. They're going to ask for some financials, and we kind of know how to structure on that application your financials so it looks like to help get you a modification versus a denial. And then we're also, again, helping you get back on track because it's not the end of the world. It's something that you're going through, and we can assist you with getting back on your feet. Next screen. So as I mentioned on the previous screen, you will have individuals, attorneys, reaching out to you. And even though a person may be a legitimate attorney, some of their practices may not be the best. There are attorneys whose strategy is to, go to court and, push things back, delay, versus getting a solution. So there are times when reaching out to a housing counselor can assist you through the whole process without an attorney, but there will be times when you will need an attorney. So, Rima, can you talk about that, please?
Absolutely. So in a lot of cases, again, having a foreclosure filed against you could be very daunting, and you might be confused about the court process. If you think you have a defense to the foreclosure, meaning that you think that your mortgage company or the servicer mistakenly applied payments incorrectly to your mortgage, which caused you to default and be in foreclosure, or if you think you are entitled to a certain notice that you didn't receive, that's when you should consult with an attorney, because an attorney knows what to do in terms of, and what the process is in terms of trying to delay the foreclosure while you explore your options. Because as I said, during the foreclosure, you are not prevented from exploring loss mitigation options. And in fact, if you do have a loss mitigation application on file, the bank is not allowed to move the foreclosure forward while you have a pending loss mitigation application on file. So if you cannot afford an attorney, there are a lot of legal aids that offer free legal assistance, either by taking your case on as full representation or just to give you legal advice. So Chicago Volunteer Legal Services, again, we serve clients in Cook County. You have Legal Aid Chicago, Prairie State Legal Services, Land of Lincoln. That's if you have, if you're either in the northern or the southern counties. Also, if if you're in a county other than Cook, you can explore your county's bar association. There's plenty of attorneys that can direct you to knowledgeable attorneys that might be able to take on your case. But I would say if you do hire an attorney, I highly recommend keeping up with them and making sure that they're doing what they're supposed to be doing. Because if your case sounds like it's taking too long, then there must be something wrong, because you're supposed to hear back from the servicer within a certain time. It doesn't take years for the servicer to respond to your loss mitigation application. So while you're waiting, the attorney's fees are piling up and the interest is accruing. So make sure to, don't just say, oh, I have an attorney that will handle it. Make sure that you are informed.
Oh, thank you so much, Rima. Do we have any questions in the chat, Willaine? I don't know if you're muted, Willaine. I can't hear you.
No, there aren't any questions in the chat at this time, but feel free to have, if you have any questions, please do put them in the chat.
Okay. And I'm going to just go ahead here and Rima, you can talk about how to get in touch with CVLS.
Absolutely. So on our website, which is very simple, it's cvls.org, you can contact us by putting your questions and submitting them, and then we will get a website inquiry, and we respond to 100% of our website inquiries. You'll just need to fill it out, type out your question, and hit submit. Or you can call our intake line, which is the phone number that's listed here, 312-332-1624. It's also listed on our website. So for these types of contacts, if you just call us or submit a website inquiry, we usually give you, review your case, give you legal advice. Cases that require appearance in court, those most
I'm sorry, Rima, it looks like you froze again.
I know, ladies, I'm so sorry.
It's okay. It's
So
okay.
usually a judge will enter a referral order, which will require CVLS to appear in court and let the judge know whether or not we are taking the case for full representation or we're not taking it. So either way, we'll get you some help, and you'll at least get free legal advice out of it.
Great, thank you so much. And Willaine, did we get our sign in and feedback forms into the chat?
I will put that in there.
Okay, great. Just to let you know, I always feel like, getting in touch with a housing counselor is a very good place to start, because we can really help you walk through, should you stay or stay and try to retain your home, or should you not? We can kind of help guide you through the whole process. And then again, retaining your home, what are your options, and or exiting the home, what are your options, and how can we assist you with that as well? So these are the ways to get in touch with our housing counseling agency. You can learn more about us at the GLCU website at glcu.org/housing. But if you'd like to call directly and get more information, get your questions answered, and or get us set up for an appointment, we have our phone there at 224-252-2620, or by email, whatever's most convenient for you. And that's housing@glcu.org. And once again, housing@glcu.org. One more time, Willaine, any questions in the chat?
No questions in the chat. I did put the link to get some, it's our intake link to find out who was here. And if you want additional assistance, again, it's free of charge to you. We can assist you with that. And also by filling out the intake, there's some additional resources that we will also email you, and which also may include a recording of this presentation.
Yes, and they sign in for that first form. Just to let you know, it is confidential. The information that you provide in there goes into a federally regulated and secure data management system. And that allows us to prove to our funders that we're actually putting on education and people are coming. They will continue to provide us with funding, and then we can continue to provide more free education. So it's all confidential, and when you're filling out those forms, it helps us to continue to help you. That's ideally what we'd like to do. Any other questions and or points that we would like to make, ladies, before we end for today?
All right, thank you so much for attending. We really appreciate it.
Thank you, ladies.
And please reach out if assistance, and tell if you know somebody else who may be going through problems with their mortgage, or even if turning it around, if you're looking for somebody who wants to purchase affordably and get assistance with down payment. Going forward, please let them know that we exist. A lot of people aren't aware of the role of a housing counselor, and hopefully that we provided some great information today for you.
Yes. I want to say thank you again to our guest speaker, Rima Sleeman from CDLS. Thank you so much, Rima, for joining us and providing your expertise.
Thank you, ladies, and I apologize about the technical difficulties that I've had.
That's okay. We had some on our end, so it was just it was the day. And
all right, enjoy the rest of your day, everybody.
All right. Thank you, everyone. Bye.
Thank you. Have a great weekend. Bye-bye.
Bye-bye.